Morning guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to take a quick look across markets. I'm going to give you a bit of an update as to what has been going on this week. So let's jump straight into it, and the first thing to say really this Wednesday is the fact that US bond yields, which I'm just looking at here, are back on the front foot. Okay, so we've just seen today the US 10-year yield hitting a fresh high since 2008, above 4.1. But you're seeing yields hitting fresh multi-year, multi-decade potentially highs across the curve. Like the 30-year is also closing in on that 4.1% level. The 5 years above 4.3 again. The 2 years back above 4.5% again. So why are yields pushing higher? I mean, there's not really a specific catalyst, to be honest, besides the fact that this has been the trend recently. And, it seems as though people or investors they just don't want to be buying bonds right now. And remember, when bond prices fall, bond yields rise. Why do they not want to be buying bonds? Well, we're in an environment where inflation remains still very, very hot in the US and globally. Central banks are aggressively lifting interest rates, and that's expected to continue. Like I'm just looking here at expectations for where the Fed funds future rate is going to be, where the Fed funds rate, sorry, is going to be next June, and we're talking about interest rates going to 5% at the moment. Now, compare that to like 6, 7 weeks ago, we were talking about interest rates only rising to about 4%. So it's a big change, and it's no wonder that yields continue to push higher. Now, this is having an effect in FX markets today. You can see the dollar index here, which is like a trade-weighted basket actually of major dollar pairs like euro dollar, cable, and dollar yen. You can see it's pushing higher. It's gone back above 112.50. It looks as though FX traders in this environment are rising yields and the hawkish Fed, and there's other things as well. Concerns about global growth, concerns about the European economy, all working in the dollar's favor. Essentially, it's got interest rate differentials and central bank support, but then it's also got that safe haven support as well. So yeah, FX traders not ready to push the dollar or the dollar index out of this uptrend. So, I mean, the fact, technically speaking, now we've respected this uptrend once again, really you're going to be looking at your next levels of resistance that you might want to be thinking about targeting, which is 113.75 and 114.70 here. Those are the highs from earlier this year. Let's just look across the actual pairs quickly. Yeah, you can see euro dollar once again sliding back, still looking to be in this long-term downtrend. In fact, let me just need to zoom out a little bit. We've been in this downtrend since February that I've been banging on and on and on about. Looks like there's no end in sight to that downtrend. And actually, talked about, I think it was yesterday's video, just another technical thing I'm watching in euro dollar. Looks like we're forming a bit of a pennant, which could trigger a nice breakout, potentially either side, to be honest. Although I do probably for now favor a downside break because of the trend we've been in. What about cable? Well, cable's back in the 112s. Things not looking too great. I mean, let me just show you. We had UK inflation again this morning, back to 10-year highs, 10.1% year over year. Didn't help sterling, even though it does support expectations for tightening from the Bank of England. So why is it not helping sterling? Well, there's just so much uncertainty in the UK at the moment with the government and this big fiasco regarding the mini budget. Like, remember a couple of weeks ago they had unveiled this mini budget, which caused a panic in UK markets, which was this crash to record lows. But then it's been reversed, and the Bank of England stepped in to support. But now the Bank of England is pressing ahead with its bond sales at the beginning of next month anyway. They've confirmed that now. The UK economic situation is pretty dire. Looks like a recession is either here or on the way. Energy crisis and everything, cost of living crisis, massively high inflation. So there's a lot of uncertainty, and it's kind of preventing sterling from properly gaining from Bank of England hawkishness, basically. Um, Another interesting currency pair, dollar yen. Look at this. It's like melting higher. It looks like markets are pretty intent on testing this psychologically important 150 level. Um, but be on standby for some choppiness because the Japanese government is, you got to think they're likely to want to intervene again, which could, remember this choppiness back on the 22nd of September, that was a day where it was announced that they had intervened. Um, so be ready for an aggressive potential move lower at some point, maybe when we hit 150, maybe if we go a little bit beyond 150, 151, we could be in for some choppiness. But the trend fundamentally is to the upside because as long as US yields are pushing higher and Japanese yields are pinned around 0%, which looks likely to remain the case for the foreseeable future, you got to think that dips will be bought into. Maybe not this exact level, although I do like that level. You got the 21-day moving average, you got that previous high, break, retest. It's a nice trade that these kind of trades often do play out. Yeah, that's something I'll be watching. Moving on, what about US equity markets? Well, earnings season's still going well. Remember, you had the strong bank earnings, which helped lift us nearly 5% on Monday and Tuesday. Um, you also had good Netflix earnings. What was the details with Netflix? Yeah, much higher than expected gain in customers last quarter. Remember the quarter before they lost customers unexpectedly. So that's eased some concerns. They gave a good outlook for the number of customers they expect to gain by the end of the year. That's all very good, happy days. But yields are weighing on stocks for now. Although S&P 500 is still above 3,700 for now and above the 21-day moving average. So yeah, I mean, we're going to have to wait and see how things play out for the rest of the week. This week, it is all about earnings, really, for US equity markets, because the data that we've got out of the US is tier two. Like Philly Fed manufacturing on Thursday will be interesting, and weekly jobless claims, as always, will be interesting, and the housing data we get this week as well will be interesting. But it's not as important as stuff like, the inflation data we had last week, or retail sales, or that kind of stuff. Um, Also, we need to be on standby for Fed speakers. There'll be plenty of them this week, and they're all just going to be hawkish, basically, you would think. So that's stocks. We're going to have to wait and see whether earnings can continue to lift us and we can test some resistance. But you got to think that given the macro backdrop, central banks still raising interest rates, inflation still high, we're probably still in this long-term bear market. You would be pretty confident in thinking for now. Finally, just a quick look at oil prices because they came under pressure yesterday because of reports that the US is going to do another release of oil from its strategic reserve. So looks very much like we're still in this kind of downtrend that we've been talking about. It's a slightly slower downtrend than the downtrend we had in June and July, but yeah, still looks like we're headed lower in oil, despite OPEC's best efforts recently um, with their output cut that exceeded expectations that helped lift us back into the upper 90s. But now macro concerns returning, US taking action to undo some of OPEC's efforts, and we're back in the low 80s now. So where next? I mean, things technically aren't looking too great, really, are they? We're back below the 21 and the 50-day moving average. Um, if I had to place a bet, we're pretty much halfway between the recent low and the recent high. If I had to place a bet, I'd probably say we're going to hit the recent low before we hit the recent high. We're in this downtrend. So let's see. Let's see how things go with oil. But yeah, guys, that's pretty much the video. In terms of what we've got coming up, some G10 things that are important. I should have mentioned Canadian CPI probably. It was a little bit hotter than expected, you could say. Doesn't really seem to have been moving markets that much though, because there's broader things going on. Like if we look at dollar CAD, it's moved higher because of the stronger dollar. You've also got some Aussie data coming up, Aussie jobs data. That's going to be important. Uh, well, this Chinese data, they're saying here that it's on Wednesday, but we don't know when this Chinese data is coming. Actually, it got delayed earlier this week. Then we got some UK retail sales and Canadian retail sales later this week. But I mean, the data, the economic calendar is not really the most important thing this week, to be honest. So, yeah, guys, hope you enjoyed the video. Hope you found it informative, and I will see you all in the next one.